General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock the workout. Top down. Monthly. $2,800 is next still. Or 28,000. Big figure number. It's a new month. So hollow EQ. This month did not have a hat, no top wig. And then this high up here. We'll keep previous month's high, previous month's EQ. We'll keep all these levels. I usually only do 2 levels, but it's gonna be key. this and like this. So previous month's high started in the middle of that weekly candle. The most interesting thing is still this gap, this parallel channel. It's by far the most interesting thing, especially when you got this gap here. So just this closing price. This is a new week opening gap that doesn't have sell side or buy side. What date is this? 13th April. Where's the 28th? There we go. Alright, from the daily, we got more stuff up here. These are old Fibonacci levels, which makes sense. I kind of put the Fibonacci to always look for up, even if it wants to look down, because that's the whole point of me putting it on my chart. It's for targets. This new week opening gap, still the most interesting area. Right off the back, it's a weak low. I want to see price target that. It's too big. I know a lot of people are gonna be thinking maybe buy this fair value gap or buy this daily open price. I could see us coming down previous month's high and then buying up a little bit more just to come back down. I don't really we don't have nothing. Just no reason to go up there, which is generally the best reason to. Yeah. Since we broke this high, this is the range. So here, where's 27? right here. Oh, it's also a 268. It's kind of in that same area. We'll see it because we got the indicator anyway. We don't have to put a line there. This will be where you'll want to buy like calls or whatever, but still, this is the first target. So we buy. Maybe buy here. This will be a thirsty buy. Like desperate to get in a trade. This is optimal. And it lines up with this week low. This old new week opening gap. Still tacky. Yeah, nothing really stands out here. Nothing stands out there. This could be the high for all of next week with how we hit with this Asian range, just from the looks of it. Let's go to QQQ. Let's go to SPX. Seven six. What's next? 7.3. What's the high? 7.2. Get this old high. Same exact gap. Yeah, same exact new week opening gap. But we used it though. It's way bigger too. What's this? April 13. See what OT with this. And the OT is here. Make sure that other one's locked. All right. Good thinking. You kind of got the same gap, but this down candle is kind of throwing me off. Let's go back to SPX. Broke the high. This is the first fair value gap of the new or the all-time high. I believe. So we broke this high here. This is the first fair value gap we created. And let's look at NASDAQ. Broke the high here. No, we had a gap here. Should do it. Well, we basically just rebalanced it. So here we need to look at here to see if this reacts as an order block. We did try to rebalance here. It came here. This is like a propulsion block in a sense. We do have a gap here, a real gap. We can close that and use that as a shift because it's like a stop hunt with the fair value gap. Let's go back to SPX. Similar here, but we already got the wick here. This looks crazy how we gapped at that previous month's high. I mean, we've just been gapping while we've been up here anyway. S&T at the highs, a sign of distribution. SPY with the no nonsense chart. All right. Put this gap here. What is that? The magnet button? I'm trying to make it straight. I feel like I'm hitting the wrong button though. There it go. Dude, we got that same gap here. Closed here, open here. Yeah, kinda. It's April 13th. I feel like this week is the draw. $702. Or old weekly low. We got the daily. This is where we broke the high. Let's do TE. So OTE is here. So sales into here, we could start buying here. And this is a valuable place for buys to target here. The old data high. H4. Got us order block down here. It's already been used. These equal lows still look like a draw. 730 is a target and a round number. Okay, QQQ. Start with the monthly. Okay, EQ's right by 2026 open. That was kind of weird. I was like, what's going on? What is this? 736.60. Okay. So this new week coming down. There's a little gap right there too. A little weekly gap, but it's not as big as this one. Let's get to E. H4. Still think under here makes sense. It's previous week's lows, like the draw on all the time frames. Even if we go higher, this will be like the initial push, and then the next push will be like the stop hunt push. All right, let's do the chart work part. All right, let's knock out the chart work. The calendar. It's NFP week. Let's just grab it from here. So Asia ain't gonna be nothing tonight, which is cool. About time. I don't think Trump did nothing crazy either for no weekend gap. Pee-wee protocol. Spec chop. Thursday. And don't trade till after NFP on Friday. See COT for the week. There we go. See what the S&P doing. I'm gonna put this in the Larry. Hold up. I don't even know what this is for. It's over here. I need the NASDAQ. Boom. Alright. So let's take a look. We got a lot of commercials offloading longs. They're offloading more longs than shorts. So we got profit taking here. What are they adding? Non-commercials added 2 longs and took off shorts. That's crazy. They're buying at the highs. Okay, maybe they're just scalping. I don't see any adding going on here. I do see them taking profits here. So they're buying NASDAQ in there. We got some profit taking on NASDAQ, adding on the shorts for non-commercials. This is actually pretty interesting. It's kind of flip-flop. So let's go here. Put this one on. Let this go. This is the NASDAQ. This is running. We'll do this. Paste. It even gave me a table this time. Okay, ChatGPT. Okay. Commercials are bullish. Net bearish. Large speculators. If we exclude non-reportables and only look at reportables, that's missing. Okay. This cop picture suggests consolidated or choppy two-way trade, not a clean breakout signal by itself. The reason commercials are only slightly net long at plus 12. equal about 0.64% of open interest. That's not a strong commercial sponsorship. Larry Williams' COT framework begins with the relationship of commercials, large traders, and small speculators to open interest, and he treats high commercial readings as rally favorable and low reading as decline favorable. So that's favorable for a decline. So the best read is mildly supportive underneath, but not strong enough to call a major bullish setup. A breakout would need confirmation from price, seasonals, or another timing turn. So we got all-time highs. We not got commercial sponsorship, Wilco, commercial strength or weaknesses. Commercial plus open interest times 100. This is not unusual strength. It's a very small commercial net long position relative to total open interest. Yeah. Large. Large specs are heavy net short, while small traders are strongly net long. Commercials are only moderately long. Yeah. Let's see here. Using color long, not cheap scissor for the trade. Seasonals. Boom. Alright, so let's get the NASDAQ. Or I can do it like this because it'll put the table. Boom. That we're still net short. Commercials almost perfectly balanced. Plus 16 contracts. It's not strong bullish or bearish commercial position. Yeah. The weekly commercial change improved. So commercial long change, commercial short change. So okay. So they ain't do nothing. Large space of net short, small traders of net long. And commercials are flat. When large specs, Larry Williams caught twos watch large specs because when they are heavy long, declines are often near. So they're net short, small traders net long, boom. Here's a signal spit. Large specs are short, mildly bullish, small traders long. So this report gives no immediate strong market bias. We ain't got nothing from the COT. We do got a lot of SPT at these highs though. So we got a 7% chance of a rate cut for June. This is Kevin Warsh season. Kevin Warsh season. See what the earnings. No, it ain't no. Not like last week. Palantir. It's a big boy. Can I move this? It's never nothing on Friday anyway. Alright, so let's see. MSTR, that's cool. Oxy is cool. I really don't like Oxy. Beyond Meat, don't like them. Coin, yeah, okay. Alright, so we just get the top three. Because I don't like none of these earnings really. The only thing that's noteworthy is AMD Tuesday, Palantir Monday, stuff catches my eye. Well, MSTR, but mm-mm, he going through something over there. They keep buying Bitcoin at the highs. Like we got bear sentiment creeping back in. And where did this come from? It didn't come from the earnings. It didn't come from the news. Bear sentiment coming back in. Let's see what the fan really doing. CNN, fan green. You just as pretty as we was last week. Just as greedy as last week. Even though the accredited investors are starting to show bears sentiment. I need 9 weeks of days for NASDAQ. Two, three, four, five, 7, 8, 9. No, it's here. And here. It's kind of interesting how the fib fits right there, even though it's a bullish fib. It's like it needs to retrace. This 9 weeks of days look on my. It look janky. All right, there we go. Let me take the uncharted territory fibs off the daily. This is 9 weeks of days. What day is this? The 31st of March. Get this scan box. I have to say, this is one of the greatest run-ups in history. 50% is here. Right at 2026 open price. price acted as like a measuring gap for this price run. Mm, Price has been bullish since March 31st. Anchor point integration. Mm, April. What is this? May? Yeah. March low is the last anchor. Story to price alignment. We got a bullish blockade. Plan on engaging. Let's go to SPX. 9 weeks of days. Mhm. Let's also take this off the daily. Boom. Same blockade, same type thing, but this date was different. Mm, yeah, we don't know. Main difference I see on SPX is the main difference I see on SPX is it does not have the follow through moves to confirm the bullish as you see on NAS or I see on NASDAQ. You look at NASDAQ, it's like all time high. Then you look at SPY, it's like return to origin. Anchor point interaction on March 30th instead of the 31st. Story is the same. Plan on to engage. Let's get the trusty SPY chart. Let's go. Let's get 9 weeks of days first. LT here. It's really our target. I don't want to see this. Let me get this off the uncharted territory fibs. And that's clean. Mm, yeah, it's the same. No new nothing. Anchor point, no change. Yeah, engage. Skill focus. We're still doing 2026 velocity. Trinity. We're gonna do those drills. Case study health plan. Execution drills. You can do it on the trade a few week competition. A little conservative. CFP week. Really, with this setup, Monday being a holiday, I'll look for Tuesday. All right, ready to go. Y'all have a good day. Peace.